day today. We had an absolutely insane day yesterday. If you guys were looking at the chart, which we're about to do, you'll see that they went absolutely crazy towards the middle of yesterday. We're expecting insane stuff today as well. So we're going to start off taking a look at some of these charts and talking about why they look how they do. So if you zoom out to the S&P and you look at it, it didn't look great yesterday. The Russells actually looked quite a bit better than it, at least for the first part of the day. And then something happened around 12:30, 12:50 just about, and stocks started turning around, right? They were at their highs minutes prior, and then stocks started turning around, moving down, and there is a reason for this. There's a pretty obvious reason for this. However, as of right now, it looks like in the pre-market, for the most part, stocks in the Russells and the S&P are actually moving up, right? We moved down in the after hours and throughout the course of the second half of yesterday, but we're actually starting to move up now, which is very exciting stuff. So we're going to talk about why that happened, why we might be moving up in the future, as well as what's going on with the whole inflation situation. So good morning, everybody. Good morning, Vivi, Heckler Koch, Rich M, Quaid, and I'm sure we'll get some of the other guys in here pretty soon. So we're going to talk a little bit about Meetkevin in this stream also, because he is very excited to see the market moving down, okay? He was very excited yesterday. He released this interesting video where he was quite hyped up, I think. The why I'm flip-flopping again. We're going to talk about it briefly, but we won't spend too much time on it. I know not everyone is interested in Meetkevin, but we will talk about that. So the first thing that we got to talk about is this little story. U.S. inflation data is like a punch in the stomach for the Fed, says Citi economists. So we got the inflation data yesterday, and it was not good, okay? We had higher than expected inflation. We were expecting to have, I believe, 7.2% inflation year over year, and it ended up being 7.5%. You can see it right there in the article. And nobody's too happy about this, right? I mean, maybe some of... Not even, well, I wouldn't even say that the gold bugs are too happy about it, because gold didn't make a crazy move, right? Gold actually moved down at the same time that the markets moved down. So we're going to talk about what that big catalyst was, right? What got these markets moving? What moved the price of gold? And you will pull up cryptos here for a second. What moved the price of Bitcoin also, right? Bitcoin moved down towards the latter half of yesterday as well. Pretty much everything moved down. And there is a reason why. So we're going to look at this story right here, coming from the St. Louis Fed, I believe. Now, St. Louis Fed President James Bullard made a statement yesterday that really shook the markets quite a bit. He said that the Federal Reserve should launch an aggressive interest rate hike campaign with a cumulative 100 basis points in increases by July 1st. So he basically is saying that he wants to raise the federal funds rate by 1% by July 1st, so in less than 6 months. And to do that, they would have to be raising their interest rates by more than a quarter point at one of their meetings at least, if they want to only raise interest rates at their policy meetings. So we're looking at a situation where we could be seeing higher than expected or higher than hoped for interest rate hikes. Now, do I think this is too big of a deal and that stocks should be reacting as dramatically as they are and that cryptos and gold should be moving down? Probably not. So we're going to take a look at why I think that. But before we do, I will point out that we've got the Fed Monetary Policy Report coming out in 55 minutes at 10 o'clock today. So we will probably be making a video later today covering that once I've had a chance to pine through it. But we want to look at a very important chart, something that a lot of people might not be considering in this market, where people are so worried about the federal funds rate and the interest rate hikes really crashing the stock market. Okay, we're going to look at something that's basically going to put all of your fears at ease for the most part, right? You might be fearful about other things, and there is actually something that we've got to talk about later that you might want to be fearful of, but it's not the federal funds rate, right? I'm not worried about a 1% interest rate hike, and I'll tell you guys why. So here's the chart for the federal funds rate, and you can see that we have had fairly high interest rates over the past. Now, that's not all. We've had fairly high interest rates particularly between the 1980s and the 2000s. So we're going to actually zoom in on those specific years. We're going to look at what the interest rates were between the 1980s and the 2000s. So let's zoom in right there. And we got to zoom out a little bit more to find 1980. I've somehow messed this up, but here we go. So 1980 and then 2000, that should be it just about. There we go. So this is what the interest rates were like in 1980 and 2000. They were up as high as 19%, 12%, 10%, 8%, 7%. It slowly trickled down and down. Eventually, we had 3% interest rates for some period in the 90s, and then back up to 5 and 6%. So looking at that, we can then look at the historic gains on the S&P 500. And it's very interesting stuff. If you actually look at the historic gains on the S&P 500, this is currently a chart from 1930 to 2020, but we can zoom in and look at just the years 1980 to 2000, similar to the years, the exact same years actually, that we're looking at on the federal funds rate chart, right? So here are the historic gains of the S&P when the federal funds rate was much higher than it is now. Currently, it's sitting around 0. And in the past, we were looking at 19%, 10%, 7%, 6%, 3% at the lows, and 6% over there, 5% right there. And the S&P was gaining 25%. One year it did lose about 10%, but it was up 14% the next year, 17%, 1% gain, 26% gain, 14% gain. In the latter years, up 34%, 20%, 31%, 26%. So the S&P has been doing incredibly well in the past, even with higher than current interest rates, right? Right now we have pretty much no interest rates, right? If you look at the chart now, you can see that we're currently sitting around 0. So what are people really that worried about? Are people worried that we're going to raise interest rates to 1%? I mean, even if we raise them to 2%, they're still lower than the 3% that we had back in the 90s, where we were growing dramatically in stock prices. So I'm really not sure why people are freaking out so much over little interest rate hikes that in the past, at least, were considered extremely easy monetary policy. I understand that people have gotten used to having incredibly low interest rates, close to 0 interest rates. But if you look at the big picture, it's actually not that big of a deal, all things considered. It's nothing new for us to have very high interest rates. And just because we're used to 0 now doesn't mean that it's impossible for the stock market to grow. And in fact, if you look at the stock market, it doesn't even look like growth has accelerated all that much due to lower interest rates, right? Over these recent years, it's not like the gains in these years are blowing the gains previously out of the water. So people are really, in my opinion, making a little bit of a big deal about nothing. I think that they're being a little bit dramatic when they're talking about the interest rate hikes, especially when they're complaining about, oh, maybe they'll go to 1%. I mean, 1% is pretty much nothing. It's really not the kind of thing that should hamper growth. Now, I will point out that there is maybe something to be a little bit worried about, right? We do, if we look at this next chart over here, we do actually have quite a bit of debt. We have a lot of debt that we didn't have in the past. A lot of this is government debt, some of it's private, but we've got a lot of debt in the United States. In fact, in the 1990s, we were only at 3 trillion. Now we are at 30 trillion. Part of the reason why is because the government wanted to spend and spend and spend, and part of what allowed for this to happen was very low interest rates in recent years, right? If you look in the 1990s, we suddenly declined all the way down to 3% and then moved back up for a little bit before going down to 1, then up to 5, and then we've been sitting at 0 pretty much the whole time, except for this little blip around 2018, 2019. For the past decade, we've been sitting at very low interest rates, and that has allowed for the national debt to grow, in some people's opinions, out of control. If you look at what we were at in 2008, we were at 10 trillion. Now we're at 30 trillion, and it's not looking like a good situation. We've added about $20 trillion worth of debt in the past 10 years. So we are currently spending quite a bit, and something needs to be done about that. So I will say there is maybe some reason for concern about higher than expected or higher than desired interest rates, but still, 1% should not be something to freak out about. I don't think that we're going to have a massive crash because of a 1% interest rate hike like a lot of people are expecting. I mean, people have gotten so used to the Fed's extremely dovish policy that they are willing to sell stocks when they hear about any kind of interest rate hike, and it's kind of scary to see. But I think that over the long term, that's not the kind of trend that we're going on. I don't think that we're going to see massive selling of stock. I think that people are going to eventually realize, all right, interest rates went up 1 or 2%, but the real rates are actually still negative, so I'd rather still hold assets. Why would I just want to hold cash? Because even if we do see an interest rate hike, let's take a peek at this. once again, even if we do see an interest rate hike up to even, let's say, 2.5%, which is much higher than what people are anticipating, even if we see that going up to 2.5%, well, what are you actually doing? Are you really going to take your money and put it in a bank account and get 2.5% interest on it when inflation is going up 7.5% per year? I mean, do you actually want to then, at the end of all of this, lose 5%, because that's the difference between a 2.5% rate on your money and the inflation that we're currently experiencing of 7.5%? I don't think a lot of people will want to be holding cash. I think that they would rather hold assets that have the chance to go up, as they have in the past, 26%, 16%, 28%, 19%, 29%, 13%. They'd much rather hold those assets. They'd maybe even rather hold gold. And that is something very interesting that's happened as of late. You know, it's scary to see Kevin buying gold. He discussed, I think, in this video, what his portfolio is like, and he said it's 95% cash and 4.99% gold. So he actually, if you look at his channel, we can take a peek at it. He just did a show with Peter Schiff. He just had Peter Schiff on the podcast. He called it The Collapse of Markets, Confronting Peter Schiff. And Peter must have said something to him this time that he really liked hearing. Now, Peter didn't say anything different than what he's said the past 3 times he's been on Meetkevin's show, but Meetkevin has changed his mind about where he thinks the markets are heading, so he decided to buy in and get some gold, which it can't hurt to have a little bit of gold. I think that you should be somewhat diversified, and gold is the largest asset in the world, so we can take a peek at that, actually. We'll take a peek at gold being the largest asset in the world real quick. So it might not be a bad idea to have some gold in your portfolio. I certainly do. And not just pure gold, right? I think it makes sense to have maybe some gold mining stocks, because those can typically go up more than the underlying metals. And here is a chart of the largest assets in the world right here. So gold at the #1 spot, $11.6 trillion market cap. So in a real pickle. It could make sense to have a little bit of gold in your portfolio, just because it is such a broadly recognized valuable asset across the world. Pretty much in any country, anywhere in the world, everybody wants gold. So it is a safe-ish thing to hold, in my opinion. I think that people might feel a little bit more secure having a little bit of gold, maybe a little bit of silver as well, even though silver isn't nearly as valuable as gold in a market cap situation. But I think it does make sense to have some metals, in addition to maybe some cryptos. A lot of people like cryptos all over the world. And gold, cryptos, maybe some stocks as well, maybe even some cash if you're really worried about stocks crashing. But I don't think it makes sense to do what Kevin's doing and going all in on cash. And, you know, keep in mind, I'm not bashing Kevin, right? I'm not trying to say that Kevin's a bad guy. I like Kevin quite a bit. And, you know, I think that he's going through a tough time right now mentally, you know, in this video, at least, though he seemed very happy. He almost seemed a little too happy. He almost seemed a little stimulated. So I don't know what's going on with Kevin, but I will throw him down a like. So if you guys want to do the same, Rocky Mountain Gobbler says you should like the video. So I think that would make a lot of sense if you guys decide to hit the like button. That would be much appreciated. So we did look at the national debt, the federal funds rate, the inflation rate, the historic annual returns of the S&P. And now we have to look at something a little bit scarier. We've got to look at something that could be very bearish for the market if it ends up happening. And I really hope it doesn't happen. We've been talking about it the past couple of streams. We've discussed this, but it's scary stuff. Biden tells U.S. citizens to leave Ukraine immediately amid troubling signs of Russian escalation. So there is scary stuff going on in Russia. If you guys haven't been keeping up with the Russia-Ukraine situation, you might want to. It's somewhat important, right? This could actually have a real negative impact on the stock market, unlike 1% interest rates. The Secretary of State, Anthony Blinken, has actually said an invasion could begin at any time. And the real reason that we don't want this isn't because of what people are talking about. Ukraine provides some oil to us and we don't want to lose trade for oil. I mean, that would be a minor concern, but the real concern is that the Ukraine and Russia going into a real conflict like this and dragging the United States into it, and China getting involved in it, as they've said they might do if Russia decides to get involved, it would not be good for the overall world, because a lot of those countries have nuclear weapons, and it could be world-ending event. And whenever world-ending events happen, which I don't think this would really become, a situation in which nuclear missiles are flying, hopefully not at least. But if it did even escalate a little bit to the point where there's the worry that missiles might be flying, stocks tend to not perform too well, right? Stocks tend to move down in a big way. And if that's the situation, then hey, Meetkevin might have made the right choice, selling everything. He might actually get his opportunity to buy in big. But short of that happening, short of a real war between Russia and the United States, I'm not seeing a huge crash in the stock market, right? These escalations so far, they've been talked about a lot in the media. They've been talked about a lot in the news. And there's been a whole lot of posturing, but I haven't actually seen yet any real significant change in stock prices. People do not seem to be too worried about this, right? When stocks moved down, it was mostly because of the Fed, not because of Russia. So overall, I'm not too nervous about what Russia might be doing. So we'll see. Anyways, British Prime Minister Boris Johnson said, kind of bearishly, things are as dangerous as I have seen them in Europe for a very, very long time. So the British Prime Minister does seem to think that there could be some risk of something bad going on in Russia. Overall, I'm not the most worried about it, but we'll see what happens. Anything can happen, and it is something that's important to cover, I think. And we will cover it, guys. We will cover it until the very end. As missiles are flying through the sky, we will be discussing the Russia-Ukraine situation and what impact it's having on the stock market. At that point, it would probably be crashing stocks down pretty hard if we ever get to that point. So hopefully it doesn't, but there is something a little bit more lighthearted, something a little bit more fun, something that people might like a little bit more than that story. And that is that Playboy wants to build a new mansion in the Metaverse. So you guys have surely heard of Playboy, especially if you're older. It's not really that big of a thing in my generation. Of course, everybody's heard of Playboy, but it's mostly just something that's referenced in old movies when kids go to the gas station shop and pick up a Playboy magazine or something like that. So it's not been that relevant in my generation, at least not that I know of. But a lot of older people certainly like Playboy. And I will say that this could be a good move on their part. It could be exactly what they need to continue moving on, to move into the Metaverse, to build a mansion in the Metaverse, to focus on the digital world through NFTs as they have been, and digital subscriptions. It could be very good for their overall company. So we'll see what happens with this. This is part of a growing industry, right? The Metaverse, that's what Facebook changed their name to. They changed their name to Meta Platforms because they realized the potential it has. And so does Playboy. So do a lot of companies. A lot of companies, even AMC has been releasing NFTs and making some money that way. And I do think that eventually we could see a bigger movement into the Metaverse, into cryptos and crypto gaming, which is something we're going to talk about in a little bit. But I think that overall, the trend is pointing us more in a digital direction, and it makes sense that we would want to do that to some extent. Now, a lot of people aren't going to like this. A lot of people are going to say that they like the real world. They don't want to be looking at a screen all the time. They don't want to be sucked into their computers. They don't want to live in potentially what could become the Matrix. I haven't actually seen that fourth Matrix movie, but I want to. And a lot of people are worried about bad stuff going on because of that. So my thoughts on it are we're probably not going to see everyone want this, but it is going to be an overwhelming trend where a lot of people want to end up moving a lot of their time into the Metaverse. They want to start spending a lot more time there. And not probably in the next couple of years, but in the next 10 to 20, I could see a ton of people moving in that direction because it provides the opportunity for essentially unlimited resources. And what I mean by that is instead of having to worry about physically mining metals and materials and chopping down wood and whatnot, whatever you need to build a house or to build products, you don't have to deal with that in the Metaverse. All you need is a little bit of electricity and you can program in whatever you want. And if it gets realistic enough, where you can really go in there and feel things and taste things, then it might be getting to the point where people decide, hey, why wouldn't I live in a utopia? Why wouldn't I live in paradise that I can code myself? I can have everything that I want, and I don't have to worry about what other people are willing to give me or working super hard in a coal mine to earn some money so that I can buy what I want. I can just go into the Metaverse and it's practically free because at that point we might have very cheap electricity if there are renewable sources out there. So it could be a way that we're moving in the future, and Playboy is jumping on the bandwagon pretty early, rebooting its brand in the digital world through NFTs. So that's something that could be affecting cryptos, right? Cryptos could be moving in a good way over the next 10 years if they really become the currency of the metaverse. And if you think about it, all that a currency really needs, I mean, we can pull up that gold chart again. All that a currency really needs, I mean, why did we make gold the currency of the world for the past couple thousand years, right? Why did kings trade in gold? Well, they traded in it because it was scarce. You couldn't just find gold laying around anywhere. It was kind of tough to mine, and it was shiny, right? People do like that. But it has become the most valuable asset in the world, and there's nothing really too special about it, right? You know, nowadays people can say, oh, you can use it in these electronics that you know, gold is the best material to use in some of these electronics, some of these chips, but that didn't exist 1,000 years ago. The real reason we're using gold is just because people decided gold is valuable, and other people would give them stuff for gold. They would give them real things. Really, if you think about it in a completely logical sense, who wants gold because you can't eat it, you can't do anything with it? At least a couple hundred years ago, you would want to have stuff like food. You'd want to have stuff like livestock. People liked gold because it was small. You could have a little bit of gold that's worth a lot, and you could store it pretty easily and trade with it pretty easily. You know what a gold coin is worth. And a lot of the same things do apply to Bitcoin. Now, what people complain about Bitcoin and Ethereum with is, you know, they're just these digital things. People just made them up. They just created them. What are they? There's no physical thing that you can hold. You can't do anything with them. And those are all valid complaints, but at the end of the day, those are all valid complaints that don't really mean we can't use it as a currency, right? That don't mean we can't use it as a store of value, because what really matters for a store of value is that it's accepted by other people and that other people place value on it. And that is a completely psychological thing, because we could be trading with seashells, much like Native Americans used to do way back before colonists got here. They used to just trade in seashells, not gold. And they did it with seashells that had a little bit of purple on them. And those purple seashells were their gold. They were rare to come by, and they used them as money. Gold was what people in Europe happened to use because they could find gold mines, and they could mine a bunch of gold. And in the future, maybe we'll start using Bitcoin. Maybe we'll start using Ethereum as these transactional methods, as stores of value, because they're going to be a lot easier to transact in. They're a lot more recognizable. You know, you can't fake a Bitcoin as easily as you can get some pyrite and make a piece of fool's gold, and or paint something golden colored, and you might not know it's real gold, and only certain people are going to know what this gold really is. If you have acid to test it and whatnot, if you're into gold at all, then you know you have to have certain acids to test gold to see if it's real. And Bitcoin, at the end of the day, is a lot harder to fake, at least according to my belief. Maybe if you're a hacker, you can steal it. Maybe if you know what you're doing super well with coding, maybe you could fake a Bitcoin. I don't think you could. But Bitcoin and Ethereum seem a whole lot more secure than gold for a couple of reasons, because they're on the blockchain, right? The blockchain is protecting them, and gold is certainly a really good asset. It's certainly something that people love, but over the long term, are people really going to want gold, or are they going to want Bitcoin? Who knows when we're living in the metaverse? I mean, you can't give people gold in the metaverse. So that's just something I've been thinking of. Currently, I think that if we really go on hard times, gold is probably a better asset than cryptos. I think cryptos are a little too new. If we really get into a tough situation, you'd probably want gold over cryptos. Gold is more of an apocalypse asset than cryptos. Cryptos are, if everything goes well and there's nothing to worry about, then people will probably want to hold on to cryptos. But if things go down in a bad way, then people probably want more gold, because then you can put that in your backpack and walk off with your bullets and food and gold and have some store value. So there are pros and cons to both. But I will be looking into these cryptos more. I've bought them in the past, and I've made some money off of them in the past, but I haven't really done enough research to really understand why they're valuable. I'm starting to understand more so why people care about these cryptos, though. So we're going to look into that a little bit more. But overall, I wanted to point out that I am getting a little bit more bullish on cryptos in general as a means of both a store of value and of transacting. And really what it comes down to is acceptance. If people decide that they're worth something, then they're worth something, because you can actually use them to buy and store value. So that's what I'm thinking about cryptos at the moment. But there is something interesting going on with cryptos that we've yet to talk about on this channel. We have not mentioned this in the past, and it's pretty cool stuff if you ask me. It's actually something that I've been into for a long time, but had no idea that cryptos were a part of until just a couple of months ago. Crypto gaming. So the number of active blockchain games has doubled in the past year to almost 400. Now, What they mean by active blockchain games is they have to have at least one wallet being active in the past 24 hours in them. The total of inactive games, or total of games including inactive ones, is over 1,100, almost 1,200 games. And people have been making a lot of these crypto games. You guys have probably heard of some of them. I've never played any. I've never looked too deeply into what they are. But essentially, they're video games that interact with a blockchain where you can have NFTs, you can have cryptos in some of them, and you can then maybe make money playing the game. You can sell those cryptos for actual cash. And it's an interesting concept. It helps, I think, the reason people are doing it. The end goal is to decentralize these games. So you don't have to have big companies making them. You don't have to have these AAA studios making them and funding them with the hope that eventually, they can include pay to win and add a bunch of DLCs that rip people off. They can be decentralized efforts where individuals could even start these games up and get funding from the crowd. If the crowd likes playing them, then they'll end up buying into some of these cryptos. That'll help fund the development of the game. The game can continue getting better and better. And people can only, put in what they want to put in, I guess, buying up some of the cryptos and NFTs from the game. And that could supposedly help fund these games and allow for a decentralized gaming industry in a way. Instead of having these big studios make these games, individuals who are just good at coding could decide, I want to make a game and include cryptos and NFTs in them and make some money off of that. And that's all they need. They might not need to be super greedy and maximize profits like a lot of these big gaming companies, and that could be overall very good for gaming. It could allow people to make games that they really want to see instead of games that they think would just make the most money, as you typically have to see at the top of these big industries. When industries get too big, they start to look more like industries that demand maximum profits, right? When they become publicly trading companies, they do have a duty to the stockholders to provide a lot of value, as much value as possible. And we'll see what happens with crypto gaming. It's something that I'm interested in. It's something that I might be getting into in the future. And I will say that Modesta Masodi, finance director at DApp Radar, said it takes time to build great games. And in traditional industries, it takes 2 to 4 years to build a great game. So we are just at the beginning of all of these crypto gaming things. And venture capital firms have already invested $4 billion to support the development and creation of blockchain-based games. So we'll see where this goes in the future. It could take us in a very cool direction. I'm not sure if anyone out there is interested in gaming, but I certainly am. And I think that it's a cool industry to be in. So we'll see if people end up being interested in this as well. And if you can make some money off of it. I know there are some cryptos out there where you can make some big money potentially buying into them. And I know that people have been calling them crypto gaming tokens. So we'll see what goes on. We'll see what goes on in the gaming industry. It's something that I'm going to definitely be looking more into in the future. So we will start talking more about stocks now. And Lux Food and Travel says, your thoughts on Affirm stock today? I saw it was down 20-something%. And let's see, Affirm, yeah, so it was down yesterday. Whew, they hit lows of $50. And I thought this was actually on them. I read a little story about it. I think someone tweeted out their earnings before they were meant to come out. But let's see, they were down from the highs to the lows at $50, down almost 40%. And currently they're sitting down. 36% on Affirm. So this is a buy now, pay later platform, in case anyone was curious. Basically, it's one of those things where you can decide if you're buying a couch online. You can decide, instead of paying $800 here, pay $100 a month for 8 months, or 9 months, since I guess you pay a little bit of interest on that. And they've been doing pretty good in the past. In fact, in November, they were as high as $176. And part of that is likely because people were expecting them to do good ahead of Christmas, right? There was a lot of buy now, pay later usage that actually happened around the holiday season. Record numbers of people were using buy now, pay later. And Affirm, I guess it was a buy the rumor, sell the news kind of situation because they started tanking. They are a growth stock, so a lot of growth stocks started tanking. But boy, oh boy, they're as low as, what are they at now? They're at $52. So once they, $53. So they are down more than 66% off of their highs. Scary stuff to see. They're down. Let's see what they're actually down off of their highs. They're down 69%. 69% down on Affirm. So, I haven't bought into Affirm. I haven't looked too deeply into it. I just know that it was a Meetkevin stock. And Rocky Mountain Gobbler says, Graham Stephan is a grounded investor who's more reliable than Meetkevin, in my opinion. I think that Graham Stephan definitely has a more concrete strategy. Kevin tends to change his thing up every now and then, which, maybe it's good to be adaptable. Graham has just decided that he likes the look of this, right? He likes the look of these S&P 500 historic annual returns. And, we'll see. We'll see if Graham beats out Kevin. I mean, so far, I believe Kevin's portfolio has beaten out Graham's, but now that Kevin's out of stocks, we'll see. Maybe Graham's will just continue to slowly but steadily rise, and maybe Kevin won't be doing so good. We'll see what happens with that. Who knows what's going to happen, but as of right now, Kevin's making a risky play being out of the stock market. All right, so it looks like stocks are doing decently. We actually managed to completely recover all the losses in the after hours in the pre-market, and now we're up. In the S&P, we're up in the Russells as well. The Russells is up 0.37%. Sundial is down 0.1%. DWAC up 0.1%. And Cfvi is at break even. So we're seeing a mixed bag today. Hopefully, we can move up. And look at this, Black Rifle Coffee Company. I know a lot of people don't like it, but I think that there's some growth potential here, up 15% today. And I do actually hold some shares in this. And what I did yesterday, near the highs, was I sold a call option against it at a $20 strike price for February 18th. So if by February 18th this thing is above $20, then I'll lose most of my shares of Black Rifle Coffee Company, but I'll have made a profit, and I'd be happy with it, right? I bought into this thing for around 10 or $12, so I'm not going to complain about that. If it ends below, though, then I'll just have collected that premium. So I'm happy regardless of the situation. Whatever happens, I'm making money. And we are, for those of you who are unaware, drinking out of this Black Rifle Coffee mug. And I know a lot of people don't like it. I know that people have their complaints, but it is a company that I like. I think that they're still doing good stuff for veterans overall. I'm still overall fairly happy with them. I don't think I haven't kept up with the story too much, but I don't mind them. Is all I'll say. Now, Austin Libby is talking about Russia, it looks like. Well, let's hope that nothing bad goes on in Russia. It looks like Black Rifle is moving down a little bit. Sundial actually just moved up. Happy to see it. And the S&P, it looks like we're sitting flat for a little bit. We're deciding where to go in the next couple of minutes. But cryptos overall, we will pull up some of the top cryptos. I know Dogecoin Millionaire, actually. If you guys haven't kept up with Dogecoin Millionaire, then you might want to look into him. Basically, he's a guy who bought a bunch of Dogecoin way back before the pump. He put in, I think, maybe, if we pull out the all-time chart, I think he bought in probably around here when he saw it moving up big. He put in, I think he might have sold his house. He took all of his savings, all of his money, and put it in Dogecoin. And it was something like $100-something thousand that he put in Dogecoin. And at the peak of Dogecoin, he had close to $3 million. It might have been more than $3 million. He was on Graham Stephan's podcast. He's talked with Andre Jick. But they were both telling him, hey, man, sell it now. You're a multimillionaire, sell Dogecoin. And he said he's not going to sell it until 1 year of holding it at least, or if it hits $10 per Dogecoin, I think is what he said. So it ended up moving down in a big way. He still has about $600,000 worth of Dogecoin at these prices. I guess it has tripled, so I think he put in close to $180,000 and continued to buy it as it was moving down. So he's accrued quite a bit of Dogecoin, and he's invested in some other cryptos like Floki, Inu, trying to maybe catch another crypto that could pump up big. And I don't think Floki, did anything that great. But he made a video today. It's been 1 year of him holding Dogecoin, and he says he's still bullish on it. I just watched it in bed this morning. I woke up and saw that he posted some video called 365 Days of Owning Dogecoin. And I decided to catch back up with the story because I hadn't heard from him in many, many months, right? Ever since, I watched one or two of his videos just to see what he was saying when crypto and Dogecoin was falling. And it was not too bad. I mean, he's still doing pretty well, right? He's still up 300% to 200% or whatever it is. So he's not too worried probably about Dogecoin being only at 3x. But it is sad that he missed out on the $3 million he could have had. Now, Shiba Inu, I know a lot of people are interested in this one. We have had just recently a little pump up, and some people were saying this could be the big one. I saw Matt Kors talking about this, talking about SHIB Army returning. And I own some SHIB. I'm not the most bullish on it, It could go up, but there's no real reason I see for it to move up in a big way. It's just a random gamble. And, I happened to get lucky and put some money in way back when it was cheap. And I just put in like $150 because that's just what I had on the platform that I could trade that crypto on. I put in everything, I guess, into SHIB just because I did see it moving up. And then it like got to an 800% gain, and I sold most of it near the top around here. I think on the way up, I sold most of it actually, and I still hold a little bit. Now it's only like a 200 or 300% gain, something like that. But it was never crazy, right? It turned like $150 into like maybe $800 at the peak, so it wasn't anything incredible. But it was something. I was happy to see it. And Bitcoin and Ethereum, those are the ones that I'm more bullish on over the long term. I think that those are the ones that could be doing quite a bit better than over the long term, I'll say, than Shiba Inu and Dogecoin. I think that if we really get to a point where people are accepting these day to day, especially if we start transacting in Ethereum, I would absolutely love that. And one of the reasons why I would love that is because we then would not have to worry about stuff like this. Let me pull this up. We wouldn't have to worry about stuff like this. The United States inflation rate. We would not need to worry about, because this would have no impact. There would just be Ethereum. And Ethereum, I believe, would actually be a deflationary currency, if I'm not mistaken. I don't know. I think that at a certain point, you maybe run out of Ethereum. I haven't kept up too closely with how the code of it works, but I'm pretty sure there's a finite amount of Ethereum. Let me actually look that up to make sure. Actually, we could probably find it right here. So it's fully diluted. No. How much Ethereum? How much Ethereum will ever exist? Okay. So let's see if this article can help us. We'll see how many Ethereum are ever going to exist. Oh, interesting. Interesting. So, how many Ethereum are there? The size of the Ethereum blockchain is not stagnant. It changes and grows constantly. Unlike Bitcoin, for example, which has a fixed expansion rate, Ethereum expands according to demand. Huh. So, how many Ether are there? There's about 96 million at the end of 2017. Well, I'm sure it's grown quite a bit by then. Wow. Okay, all right. So it looks like it's not deflationary like Bitcoin, but it is at the very least, not just getting printed out the wazoo like the dollar is. I mean, boy, oh boy, the dollar. I just do not have very much faith in it at this point. I do not want too many dollars in my portfolio, I will say. Here, we'll put this. We'll put a poll in the chat. Do you trust the dollar? And we'll put that in the chat. We'll see what people think. Maybe some people do. Maybe some people don't. I'm typically not the biggest fan of the dollar. I tend to not trust it all that much. But overall, what we're seeing, okay, the poll just went up, so feel free, anyone who wants to vote. We've got some votes coming in. A lot of people have voted in this poll. Do you trust the dollar? It's looking like at the moment most people are saying no. But we'll see as this poll really fills up what the end result is. Now, we're seeing some good movement in Sundial. All right, we turned green on the day. The overall market is still barely green. We're barely eking out a gain at 0.04%. Hopefully, the Fed doesn't say anything to spook us. They certainly could. They really could, because in 20 minutes, we're going to get the Fed monetary policy report. And if they say something that really spooks the markets, they could be moving down. Now, I'll tell you, I just view those as buying opportunities, because I do not think that a 1 or 2% interest rate hike is really something that could crash the markets. Partly because of what we talked about at the beginning of the stream. For those of you who weren't there, I'm going to show you guys these charts again, just very briefly. for people who are interested. Pull up the federal funds rate right here. And if you look at the time period of 1980 to 2000, I think that should do it. No. 1980 to 2000, we'll find the chart for it. So we've got 1980 to 2000 right here. Here's what the federal funds rate was. We were sitting at the beginning of that period around 19%, 14%, 15%. Then we were down around 9%, then 6%, 5%, 7%, 9% again. The lowest we ever got was just under 3%. We were barely under 3. And then we moved back up to 6, 5, and whatnot. And if you look at how the S&P performed during that time, we can see that the S&P ended up actually performing quite well. They ended up performing quite well during that 20-year period when interest rates were very high. And they were up, 25%, 17%, 26%, some years 14%, 12%, 27%, 30%, 20%, up 30%. And a lot of people probably aren't realizing that even if we do get interest rate hikes, and even if they're more significant than expected, even if, let's say that the Fed decides to really hike interest rates and raises them up to 5%, where they were basically before the 2008 recession, right? Before the financial crisis. Let's say they raise them up to 5% completely out of nowhere, just unexpectedly. Well, obviously that would have a really bad short-term impact on the stock market. A lot of people would freak out. But at the end of the day, do people want a 5% interest rate in their bank account when the inflation rate is 7.5%? Even the reported interest rate is 7.5%. It's not even what what we're really seeing. And if you actually go to the pump, you're probably seeing much more. If you're going to the grocery store, you're probably seeing much more than this. But overall, this is what the government says it is. And 7.5%, even that is more than the 5% interest rate. Absolutely crazy stuff. There's no way they're going to raise it to 5%. And it's possible. Anything is possible. I'll say that. But are people really going to want to collect those interest rates? Or are they going to want to put their money in the stock market where they could be making 30%, 20%, 31%, 26%, 19%. Maybe they could lose 1.54% on top of the inflation, and then they'd have a really bad year of down, 9.5%. That wouldn't be good. But it's better to have a chance at making money than a guaranteed chance at losing it, just letting the cash sit in the bank account if you're seeing higher inflation than what the interest rates are. It just doesn't make sense to think that people are really going to pull out big time of the stock market and just start holding a ton of cash when inflation is still higher than the interest rates, meaning real interest rates are actually negative, right? You're actually losing money just leaving it sit in a bank account and collecting the paltry interest that they pay you. Good morning, Abstract. Welcome. What's up, man? And MWS says, I hope Sundial can hit 60 cents today. That would be nice. We aren't too far off. In fact, we were at 59 cents just yesterday. And it would be nice, pretty much every day for the past while, we have been making new highs each day in this uptrend, right? We got to 58 cents 2 days ago, 59 cents yesterday, and maybe we'll move up big. Maybe we'll get to 60 cents today. That would certainly be very nice. Overall, it doesn't matter if we hit 60 cents today. It doesn't matter if we hit it tomorrow or next week. I think that over the next couple of months, regardless of what happens over the short term, over the next couple of days, I think we're probably moving up in a big way with Sundial, I expect. As long as the markets don't crash. If Russia and the United States really start going at it, that could be bad. I will not lie. That could be very bad, not just for Sundial, for all stocks. That would not be good. So that is a real risk, right? We like to talk about real risks on the channel. And there's the potential that something not too pretty could happen between the United States and Russia. I certainly wouldn't like to see it, but you got to talk about the real possibility that there is for that to happen. So, hopefully we'll be able to avoid that. Abstract says, just been working on my music lo-fi album dropping soon. I look forward to listening to it. I think I have a link to it on SoundCloud. I think I have your SoundCloud, I think it is, on Instagram. So, FA says, Putin is not backing down. I know, it looks like nobody's backing down in this situation. And the reason that we're talking about Russia today is because, let's see if we can find this story. Scary stuff. Biden tells U.S. citizens to leave Ukraine immediately amid troubling signs of Russian escalation. And the Secretary of State Anthony Blinken has said an invasion could begin at any time. Now, this might just be posturing, right? It might just be these people saying, get the citizens out. An invasion could begin at any time to kind of show Russia that we understand there's a real threat and that we're not worried about it, to kind of call their bluff. But it does start to seem a little bit worrying when we really hear this stuff. And it seems like nobody's backing down, and it seems like Russia and China might be in cahoots. It seems like they might be. I mean, Russia and China, their leaders have spoken at meetings, and I think China said that they might support Russia, I believe. I don't know for sure, but I believe that's what they said. Prime Minister Boris Johnson also said, "Things are as dangerous as I've seen them in Europe for a very, very long time." Now, that doesn't sound good either. So hopefully nothing too catastrophic is going to happen in Europe. I really hope that we don't get a big escalation of this situation to the point where it's actually a hot war, because that would be, in my opinion, the most catastrophic thing that we could see for the markets. But it looks like stocks are actually moving up, and the Russell's moving up more than the overall market. Look at that, up 0.7% on these smaller cap stocks. Let's see if we can pull out the market map. Yeah. So stocks are pretty stagnant, I will say. They're fairly stagnant. If we look at the market map, though, you can see that they're overall a little bit more green than they are red, right? There's a little a vein of red right here where you see it move through basically the middle of all these stocks. Healthcare's not doing great. Banks aren't doing great. Amazon's not up as much as Apple, Microsoft, Google, Facebook, Tesla. But overall, there is more green than there is red in this market. So I am happy to see it. I am happy to see it. Now, on StockTwits, let's see what we got. Yeah, it does not surprise me to see the top trending stock at the moment, Affirm, that payment buy now, pay later processor. They are doing pretty poorly today. They are down in a big way. Down in a big way. We can take a peek at their chart real quick once again. And I'm not quite caught up to date with exactly what moved them down in such a massive way. Let's see. Yeah, so worse than expected Q2 earnings results. All right. Yeah, so they're not doing great. And one analyst sees no near-term growth catalysts. So I will say, in this environment where people are worried about inflation and interest, Affirm might not be the best play, because they're all about buy now, pay later. I'm not sure exactly how it works for them, if they're taking out debt to fund all of the purchases that their customers are making. Basically, I'll give you a brief explanation of how Affirm might work. If you were to buy a couch, you might see two options. You might see the option to pay $800 up front, or you could pay with Affirm and pay maybe $50 a month for 12 months or whatever it is. And if interest rates go up, then Affirm is not going to be able to price things as competitively, right? They're going to have to start charging a lot more interest, most likely, and they might see a lot less use because of that. Now, 1 or 2% rate hikes probably aren't going to make or break them, but in this environment, people are worried about that. So that's another potential reason why people could be a little worried about what happens to their price. And they have moved down pretty significantly. I will say they are a growth stock that was doing incredibly well in November. I mean, talk about a stock that was flying high in November. They were up to $176 at their highs in November, and that was about a 3x from where they were just a couple of months prior. And now they're back down. They're back down almost to their lows. They're down to 52, and their 52-week low is 46.50. So they have been slammed over the past couple of months. Really, over just the past 2.5 months, they've just gotten decimated. And they were on an uptrend along with a lot of these growth stocks, but their earnings kind of slammed them down. So it looks like they won't be moving up and continuing this uptrend, unlike a lot of stocks that seem to be doing better than they are, at least, right? Sundial, if you zoom in on that, still in a pretty solid uptrend, right? We're not actually moving down. We're green on the day. We're hopefully going to see higher prices in the next couple of days, the next couple of weeks. But even if we don't see hot prices that are that much higher in the next couple of days or weeks, I think that we'll see that over the next couple of months. It's impossible to say exactly when that's going to happen, but I am not too worried about Sundial. I think we're going to see some real good stuff from them, and we will take a peek at the short interest and see what's going on short interest wise. So, looks like shorts on Sundial. There are a couple more in there. There's 0.27% more. It's barely changed over these past couple of days. We haven't had changes too dramatic. We're up to 11.89% short interest, 244 million shares. We had a little bounce up off of what we were at yesterday. We were at 38 million. So, yeah, Sundial, there's a couple extra shorts popping in. What else is new, right? It's always been fairly heavily shorted. A lot of shorts don't like this one, and we're going to see. We're going to see what happens to it. Travis says, or Abstract says, how's crypto? And I think Affirm chain charges 22% interest. Jeez, that's almost worse than a credit card. Oh boy. But yeah, cryptos, there's a couple of stuff. There are a couple of things. Cryptos I was talking about, I'm getting a little bit more bullish on them over the long term. They're not looking great today, right? They're all down about 0.5%. But that's not too big of a deal. Look at this story, though. Playboy wants to build a new mansion in the Metaverse. And Playboy has plans to reboot its original brand in the digital world through NFTs, digital subscriptions, and a new mansion in the Metaverse. So pretty cool stuff. But also what has me very interested is crypto gaming, right? So there have been a bunch of developments in these cryptos and in the Metaverse and whatnot. But crypto gaming has been growing very rapidly. And I'm thinking that this could be a huge industry in the future if it really allows us to decentralize the gaming industry and get out of the clutches of these big AAA studios that basically, they're there to make a profit. Some of them are really good studios and they want to just make the best game possible, but those, I feel, nowadays are few and far between. There's very few, and I don't know how many of you guys are interested in gaming, but I feel like people have been getting fed up a little bit with the games that have been coming out and the pay-to-win that's sometimes included, the DLC, all the microtransactions. It's kind of excessive, I think. I would much rather have a decentralized game where you can make some money, maybe even playing the game if you really like it, make some money in the Metaverse, you can sell the NFTs or cryptos for real-life stuff, and that these games can potentially get funded through crowdsourcing, right? A bunch of these people can come in and buy up these cryptos and buy up these NFTs, hoping that they'll be worth more later. That can fund the creation of the game. And the teams can be, just groups of people who have a passion for coding and have a passion for a game, who think it could be a really great game to make. And they don't have to worry about, having a really great GoFundMe page and having a huge campaign on that. They could just get this funded by people's own self-interest in potentially making some money off of these cryptos and NFTs. So it allows for the best of both worlds. It allows people to make some money. It allows people to not try to maximize profits if they're in control. It allows people to pursue their passions in these games. And I think this could allow us to see much better games than what we're getting out of these AAA industries. Because right now, you kind of don't have a choice. If you want a game, there are the games that are available. And they're all pretty much made by these big studios. There are some that are indie games and are really fun and passion projects. And those can make some big money for those individuals. But the big industries, big AAA studios, they have figured out the secret formula to getting a lot of money, and it does not include making the best game possible. They make a good game. They make it as cheaply as they can, and then they have these microtransactions for people who get addicted to the game and end up spending thousands of bucks on them. And they sell DLCs that are relatively interesting, and then hope that big swaths of the population end up, by the end of all of these DLC purchases, spending maybe 200 bucks on a game that originally they thought was going to cost 40, 50, 60 bucks. So I think there's a lot to be said about the potential that this crypto gaming has, and if people really like it and they want to put their money where their mouth is, then the cryptos or whatever that are supporting crypto gaming could move up in price. So that's something I'm interested in. And Abstract says I'm pretty bullish on Audius right now. Audius, I've not heard of it, but I will look into it. So let's see. Audius. Might be a music crypto. It sounds like it could be. What is a music streaming protocol? Initially built on POA network, now living on Solana. Wow. Okay, yeah, this could be good. I think that, for artists and whatnot, NFTs are also a good thing that's developed over the past year or two. NFTs, that allows you to sell your stuff, and if you make an album or something, you can sell maybe the cover as NFTs, or you could sell tickets as NFTs or something. You could do something with NFTs if you're an artist. It's maybe a little bit more useful if you're a visual artist, right? If you're making artwork instead of art music, then it might be a little bit more useful to have those NFTs, because then you can actually sell the art as an NFT visually. But maybe you can do an NFT with audio in the file as well. That's possible. I believe that's possible, at least. So no reason you couldn't make some big money using NFTs also, as well as that crypto audience. I'm not sure exactly how it works, but it seems interesting. So we'll see what happens with these gaming cryptos and whatnot. I overall have been becoming more and more bullish on them over the long term. I think the more that I've looked into them, the more that I've learned about them, the more potential I think they have to really help decentralize stuff. And boy, oh boy, am I a fan of decentralization. I think that a lot of our problems crop up because we give a little bit too much power to too few people. And it's kind of necessary when you have a centralized system that you don't have, a million people arguing with each other trying to make a decision. It does help for efficiency to have fewer people making that choice and just debating amongst themselves. But it also really lends itself to corruption and to people basically just taking advantage of the whole thing. And that's what I don't like. So I'm looking forward to decentralized finance, decentralized art, decentralized gaming. Maybe we can get to decentralized government at some point. We'll see if we can vote through a blockchain or something. We'll see what we can do, what kind of potential we've got. But hopefully we'll get good stuff coming down the pipeline. That would be my hope. You never know, though. Now, as of now, we've gotten slightly greener. We've gotten slightly greener on the market. We have changed just ever so slightly. We're a little bit more green. Amazon actually turned more red, but whoa, actually, some of these bigger stocks moved down. Let's see what the heck is going on. Yeah, it looks like the S&P is suffering a little bit. We had a little uptick in it, and now we're starting to move back down. Look at that, 953. Okay. Biden to hold 11 a.m. call with transatlantic leaders on Russia military buildup near Ukraine. Called to include leaders of Canada, the European Union, France, Germany, Italy, Poland, Romania, Britain, and NATO. So this could be a development, guys. We'll see what happens with this whole Russia-Ukraine situation. My hope is that it does not escalate any further than it has. It is getting a little bit too close for comfort. I honestly didn't expect it to be going on for this long, to this extent, and to have the U.S. pulling all of its citizens out. I know that they already pulled out the ambassadors and whatnot, the people in the embassy. But now that they're telling the citizens they've got to go, it's starting to seem a little worrisome. And you never know. You never know what can happen in these situations. If it really does take a turn for the worst, I mean, these could be the end days. These could be the end days, and hopefully they're not. I like the world quite a bit, and I like the stock market too. And even if it's not the end days, any kind of escalation and war could cause a sizable dip in the market, which, to be fair, as long as it doesn't really have too big of a real impact, could be a big buying opportunity just while people are fearful. Don't forget that Warren Buffett quote, "Be fearful when others are greedy, and be greedy when others are fearful." That is one of my favorite quotes of his. I think it actually speaks a lot about the stock market and helps you get a better value on these stocks, right? Helps you get a better, higher potential return, because when the risk is higher, so is the higher potential return, because people have sold based off of the risk, right? People are selling to get out of the markets when there's a more risky situation, and thus the higher potential return, if the risk doesn't end up being as bad as people think, or just doesn't end up happening, the higher potential return is much greater. So overall, this could be a good situation, right? If we see a little dip in stocks, maybe there's a little bit of fear around it, but I would rather not get to that point, because it is a world-ending thing if it goes a really bad direction, and I would rather not take that risk just to get a dip in stocks. But that is just my opinion now. It is 10 o'clock, so we will be ending the stream. And keep in mind, guys, anyone who is sticking with us and who has watched us potentially for the first time, maybe on Rumble, we've got some people there. We do these streams every morning at 9, so feel free to tune in if you enjoyed, if you like this stream, then feel free to join us every morning at 9. We are here pretty much every day, and we are growing on YouTube and Rumble, and we're happy to see it. So Other than that, guys, keep in mind on Monday, we've got a big announcement, very exciting stuff happening on Monday. So make sure to stay tuned for that. It will be cool stuff. If you're invested or interested in the channel, then you might be interested in hearing what we've got to say on Monday. So other than that, guys, have a great weekend. Hopefully nothing blows up in Russia and Ukraine over the weekend. Hopefully we don't see any real catastrophes popping up, but you never know what's going to happen. So have a great one. Enjoy your time. Spend some time with your family. Don't think about the markets or Russia. Bye, guys.